Good morning, everybody. Welcome to our June 24th, 2020 morning coronavirus response team update. My name is Erik Daly. I'm a member in the firm's corporate group. I practice in the mergers and acquisitions area, and over the past 3 or 4 months, I've also spent a lot of time focusing on CARES Act issues related to COVID-19, and in particular, worked with many clients and other people in the firm on Paycheck Protection Program issues. And today's update will be shorter than some of the other PPP updates we've done. I really just wanted to spend about 30 minutes maybe today because there was some additional guidance issued late Monday night that will, I think, be helpful for a number of borrowers and help address some questions that I couldn't answer before, but I was receiving pretty frequently from clients and webinar participants. So this won't be a full hour, but I think it'll be nevertheless helpful for people, or I hope so anyway. Before we jump in, just very quickly, I'd like to go through a couple of the news headlines, and then also I always like to start the webinars, and I know others at MJ do as well, by just reminding myself and others who are participating or listening in that our approach to presenting these webinars and continuing this type of engagement is to work with community members in a spirit of collaboration and candor, ingenuity, and resourcefulness to help weather this pandemic, whether it's here in Michigan where Miller Johnson's located or elsewhere. So thank you to people for tuning in and participating in the webinar again this morning. In terms of news updates, which is something that we also do at the beginning of our webinars each day, I'm going to keep it fairly brief today, again, just because I'd like to keep the webinar as concise as possible today. In terms of new cases and deaths resulting from coronavirus, globally, there's continued increase on both of those statistics. I think a number of countries, Brazil, unfortunately, is having quite a number of new cases and continues on a growth trajectory. And in the U.S., we're having some success in certain states. Other states, like Texas, have been reporting all-time highs in cases. So, as I mentioned on the webinar last Friday, it seems like we're still potentially very much in this first wave, and there's still quite a bit of uncertainty as a result of that. And that's a factor in as it relates to the PPP is what's the economic impact of that uncertainty, and that goes back to kind of some of the eligibility questions for your need for the loan. Obviously, the human element of that is the most important thing, but it is actually also relevant as it relates to economic uncertainty as well. Here, more locally in Michigan, I'd say we're one of the states where there are fewer new cases, and so there's some planning happening around budget proposals to infuse some more money into our schools for potentially reopening in the fall. However, Governor Wimmer said that she will not be moving Michigan to phase 5 of our reopening plan quite yet, so we'll keep an eye on that, but it doesn't look like that will be happening this week. So that's really the news I wanted to summarize today. And with that, why don't we jump into the update. If you've been attending the PPP-related webinars, these first 2 bullet points will really just summarize at a very high level the last 2 PPP presentations we've done, summary overview of the PPP Flexibility Act, and then the updated loan forgiveness applications that were released last week. and then spend most of the time talking about the major takeaways from the updated loan forgiveness guidance that was released overnight on Monday. And then just some concluding remarks and information about our firm's PPP compliance and audit preparedness program. So let's get into it, please, and we'll go to the next slide. So this is probably familiar to most folks on the call. If you've got a PPP loan or you've been tracking the development, I've bolded and highlighted here some of the, not highlighted, I've bolded and underlined some of the key things that will come up again later. But the PPP Flexibility Act was signed into law on June 5th. And it was really meant to provide more flexibility for borrowers to get the maximum use out of their PPP loan on a forgivable basis. So just very quickly, it extended the original 8-week, kind of uniform 8-week loan forgiveness period so that it would be potentially up to 24 weeks, but in any case, not conclude later than December 31st, 2020. Existing PPP borrowers, so those that had loans before June 5th, could keep their 8-week period. The Flexibility Act reduced the minimum payroll cost spending requirement from 75%, which had been imposed by Treasury and SBA, to 60%. And that was later clarified that was not a all or nothing test, so you could spend less than 60% on payroll costs and still get partial forgiveness. The Flexibility Act also extended the June 30th safe harbor date for rehiring or reinstituting prior compensation levels to push that out to December 31st. Prolongs the deferral and repayment period for loans. So all new loans have a 5-year term, and loans originated before June 5th could be potentially renegotiated with a lender to extend the term from the original 2 years to 5 years. And they extended the loan deferral period from 6 months until basically you wouldn't have to start making payments on your loan until 10 months after the end of your forgiveness period. And then PPP participants were also freed up to use some of the payroll tax deferral provisions that they were originally excluded from using under the CARES Act. Next slide, please. The PPP Flexibility Act also added a couple of new exceptions for decreases in full-time equivalent employees, not counting against your loan forgiveness calculations. The first one was really more of a codification of something that the SBA had already sort of adopted by rulemaking, which was if you lost an employee and you can't rehire them, and you've tried to rehire them or somebody else who's similarly qualified, that won't be a penalty against you. And then more substantively, the Flexibility Act included an exception for borrowers who could not rehire back up to prior levels resulting from a decline in business activity due to or arising from Health and Human Services, Center for Disease Control, or OSHA compliance requirements or rulemaking guidance created between March 1st and the end of this year. And that's bolded here because it will be relevant among the key takeaways. Next slide, please. Okay, so that's the Flexibility Act. Then last week, so about 11 days after the Flexibility Act was signed into law, SBA and Treasury introduced new forgiveness applications, new PPP loan forgiveness applications. Only one form of application had existed before that, and it was equally expensive regardless of whether you were a sole proprietor or a 400 employee business. That required quite a lot of information. So the SBA and Treasury had gotten some pushback on that and introduced a new Form EZ application. which required less information and somewhat less supporting documentation. The original loan forgiveness application was also updated for borrowers that had experienced declines in employment levels or compensation reductions that would necessitate more information. But both versions of the application also implemented the necessary changes under the PPP Flexibility Act that we just went through. Next slide, please. The potential benefits of using this more streamlined easy loan forgiveness application is really because the threshold qualification eligibility for using that form is that the borrower not have experienced full-time equivalent employee or compensation reductions that would reduce their loan forgiveness. Because that's sort of a prerequisite for using the form, far less information is required on those topics, although there are still certifications that the borrower would need to make in order to basically attest that it's eligible to use that form and still required to retain significant amount of information and files related to their loan. For example, the rule that requires borrowers to retain their complete PPP loan file essentially for 6 years following forgiveness or repayment applies to both types of loan forgiveness applicants, and the SBA still has a right to come in and request or audit any other relevant information. Next slide, please. And then, as I said, the standard loan forgiveness application for any borrower that doesn't qualify for the easy application, that's the form they're going to use. And that updated form really didn't dramatically change other than to conform to the PPP Flexibility Act changes, and that includes implementation of the new employee-related safe harbors that I mentioned earlier. So that's where we are in terms of the loan forgiveness application. So why don't we keep going on the slides and now pivot to the major takeaways from the new loan forgiveness guidance. Late on Monday night, June 22nd, overnight really, the SBA published an updated interim final rule regarding loan forgiveness, both substantive issues as well as process issues. The process issue changes really aren't that significant, so I'm not going to focus on those in this webinar. We may do a follow-up webinar at some point to drill down a little deeper, but on some of those finer points, but really going to try to focus on the key substantive changes here. This latest rulemaking from Monday night amended two prior IFRs or interim final rules that the SBA had put out on May 22nd, 2020. At that time, the Flexibility Act was still being sort of negotiated or discussed in Congress, and the SBA, needed to get something out there, so they published the IFR, notwithstanding that the Flexibility Act looked like it was probably going to pass at some point. But now that it has, they've updated that rulemaking, and most of the amendments to the prior IFRs really just implement changes that are consistent with what I described for the kind of summary overview of the Flexibility Act. So the reduction from 75% to 60%, change in loan maturity date, things like that. So a lot of the prior forgiveness concepts remain mostly intact, but there were some important modifications or clarifications that helped address questions that people had following the Flexibility Act becoming law. Next slide, please. Probably the most important clarification or statement in the new forgiveness guidance is that PPP borrowers do not need to wait to file their loan forgiveness application until their covered period ends. So if you've already utilized all of your PPP loan proceeds, even if you're a 24-week borrower, you don't need to wait until 24 weeks or December 31st to go ahead and submit your loan forgiveness application. And that was the question that a lot of people had both before the applications were released and then the loan forgiveness applications suggested but didn't quite confirm that that would be the case. But this latest IFR does hammer that point home and more clearly. And so it's now clear that you could submit your loan forgiveness application, say after 12 weeks, even if you're a 24-week borrower under the PPP. The major caveat to that is that if you're a borrower that has experienced or had any employee experience wage or salary reductions of more than 25%, then when you go ahead and submit your loan forgiveness calculations with your application, you would need to apply that reduction of compensation as if it remained in effect throughout the entire forgiveness period. So why don't we go to the next slide, because there's an example that's included in the latest rulemaking. So if you're a borrower that's using the new 24-week period, either because you got a loan after the Flexibility Act went into place, or you got your loan earlier but did not opt out for the 8-week period, and just the example in the IFR uses fairly simple math here just to make it clear. But the borrower, in this case, let's say reduced an employee's weekly salary from $1,000 a week initially to $700 a week during their covered period. So that's a 30% reduction. I mean, let's just say the employee continued to work full-time, so there's no issue about hours. Just hold that part of it constant. The first $250, representing the 25% allowable reduction, is exempted from the loan forgiveness reduction. But the next $50, so the amount between 25% and 30% in this case, is not exempt from the loan forgiveness reduction. And in fact, even if the borrower went in and applied for loan forgiveness after 12 weeks, they wouldn't submit for a reduction to their forgiveness of $600. They would have to do a $1,200 reduction. So they'd have to basically apply that $50 excess weekly reduction over the whole 24-week period and not just the 12 weeks. What's a little unclear still from the guidance in the application form, the forgiveness application form, is if there's any opportunity for the borrower to reinstitute the prior comp levels early as well before submitting their application. I think you could read the loan forgiveness application to allow that, but that possibility was not addressed in the latest rulemaking. So it may be that there's more guidance on that point. If you're a borrower who didn't experience compensation reductions, so you did not have any employee with a reduced compensation more than 25%, then this is not applicable. You know, if you apply early, none of this is applicable. So it's really just for those who had employees with more than 25% reduction in compensation or wages where these calculations would potentially come into play. Next slide, please. Okay, the next big thing that the new loan forgiveness guidance addressed, and then we had gotten some questions about, was the new safe harbor related to, I'll call like health and safety rules. So consistent with the Flexibility Act, borrowers are generally exempt from loan forgiveness reductions to the extent it results from, or I shouldn't say to the extent, I should just say loan forgiveness reductions arising from a decrease in full-time equivalent employees during their covered period, if the borrower can show through retained documentation that they were unable to return to the same level of business activity as they were operating at before February 15th of this year as a result of compliance with requirements established or guidance issued after March 1st and before December 31st of this year by either the HHS, Health and Human Services, CDC, Center for Disease Control, or OSHA, related to maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirements related to COVID-19. So that exemption would be helpful for a number of businesses that were more directly impacted by that federal safety requirements, whether for workers or customers, but it wasn't clear if that would, at the time the Flexibility Act was signed into law, wasn't clear whether that would translate down to a business that was, say, complying with a local or state order that, was kind of based on those federal guidelines. So next slide, please. The latest forgiveness rules made it clear that this new safe harbor exemption would be interpreted pretty broadly by the SBA in terms of being borrower favorable. So first, SBA is interpreting this exemption to include both direct and indirect compliance with those HHS, CDC, and OSHA requirements or guidance. And the rationale is that a significant amount of the reduction in business activity stemming from those requirements is as a result of state and local government shutdown orders that are based on guidance from those agencies. So when you're kind of keeping your documentation, you want to point to either a direct impact from one of those agencies' rules or guidance, or a state or local order that's based in whole or in part on those federal guidelines. Next slide, please. And then kind of a related point, an example that's included in the updated rulemaking also is a very favorable example for PPP borrowers that were required to close or significantly reduce their operations for some period of time as a result of state or local orders that were or are based in part on those OSHA, HHS, or CDC guidelines. And the example, you can read the language here, but it goes through an example of a beauty care product retailer who has both an online presence and a physical store presence. And the example says that a state or a local order that was kind of based on federal guidelines forced the store to shut down their physical location. And it says that because that borrower's business activity during the covered period was reduced compared to its activity before February 15th due to compliance with those requirements, the borrower satisfies the Flexibility Act exemption and will not have its forgiveness amount reduced because of a reduction in FTEs during the covered period. And then importantly here, as long as the borrower retains records of the applicable government shutdown order and resulting reduction in business activity. And this is important for a couple of reasons. One is the record retention requirement. Again, just emphasizing that you want to be prepared to have the documents ready if you get reviewed or audited. But more substantively, the fact that even it appears from this example that there's basically a complete exemption from the FTE reduction, FTE loan forgiveness reductions based on being able to tie back the FTE reduction to a state or a local order or a federal rule or guidance from HHS, CDC, or OSHA. So that's obviously going to be relevant to most, if not, virtually all borrowers will have some experience complying with OSHA, CDC, or HHS or state or local implementing rules in some way. So that's a very important development. Next slide, please. Okay, the new rule states that in terms of a deadline for submitting the loan forgiveness application, which is another question I've gotten a fair amount, is whether I'm an 8-week or 24-week borrower, when do I actually, is there a date when I have to go in or a deadline to submit the application? And the forgiveness rule that was released Monday night says that you basically any time before the loan's maturity date, you can go ahead and submit your forgiveness application. However, and this is consistent with the Flexibility Act, if you wait too long, so if you wait, up to 10 months, more than 10 months after the end of your covered forgiveness period, after that 10 months, you would have to start making payments on the loan. You could still go ahead and submit your forgiveness application after that, but you would no longer get the benefit of that payment deferral period. Next slide, please. And then for some businesses, there was also, or some individuals or businesses, there was also helpful guidance about owner compensation issues. And some of this is rehashing a little bit what we went through when the loan forgiveness applications were updated last week. But basically, for borrowers using an 8-week covered period, owner compensation is limited to either eight weeks worth of 2019 compensation for that owner, employee, or self-employed individual, subject to a cap of $15,385 per individual, whichever is less, in total across all businesses. And for all other borrowers, so any borrower that's not using the 8-week period, which presumably includes 24-week borrowers that go ahead and submit their loan forgiveness application early, even if they don't wait out the full 24-week period, then the amount of loan forgiveness is limited to 2.5 months worth of 2019 compensation, or $20,833 per individual, whichever is less, again, in total across all businesses. Next slide, please. And we've gotten a lot of questions about how those rules apply for different types of owner employees, or whether somebody is even considered an owner employee in the first place. And we didn't get all of our questions answered in this latest rulemaking, but there was some helpful guidance. We still don't have sort of a definition of what an owner employee is in terms of what percentage of ownership, results in somebody being considered an owner employee. But let's assume that we get an answer to that question eventually, and we have a distinction between who is an owner employee and who is not, in terms of how much they need to own to qualify as an owner employee. If you're a C corporation owner employee, then you're capped by the amount of your 2019 employee cash compensation and employer and retirement health insurance contributions made on your behalf. So all that is totaled up to, calculate your maximum amount of forgivable owner compensation, subject to the $15,000 $385 limit for an 8-week borrower, or the $20,000 plus limit for a 24-week, or for any other borrower. However, if you're an S corporation owner employee, then you're capped by the amount of your 2019 employee cash compensation and employer retirement contributions made on your behalf. However, your employer health insurance contributions made on your behalf cannot be separately added, because those payments are already included in your employee cash compensation. So it's similar to the C corporation approach, but you would exclude employer health insurance contributions made on your behalf. Next slide, please. And then for a Schedule C or F filer, they are capped by the amount of their owner compensation replacement, calculated based on 2019 net profit. And again, this is all subject to the $15,000 or $20,000 limits that I described a couple of slides ago, but that's the 2019 kind of base period amount you would use would be your owner compensation replacement based on 2019 net profit if you're a Schedule C or F filer. And then a general partner would be capped by the amount of their 2019 net earnings from self-employment, reduced by claim section 179 expense deductions, unreimbursed partnership expenses, et cetera, and then multiplied by 0.9235. Self-employed individuals, whether they're Schedule C or F filers or general partners, their retirement and health insurance contributions are included in their self-employment income. And so those amounts cannot be separately added to the payroll calculation to kind of increase the eligible forgiveness amount for those self-employed individuals. Next slide, please. So there are other items in the forgiveness rulemaking update that changed things a little bit, but those are really the major points or the major points I wanted to cover sooner than later, just because we had gotten a number of questions on those issues, and I see there are more questions in the Zoom box here. But in terms of big picture takeaways, the ability to apply for loan forgiveness early, combined with the kind of borrower favorable FTE and compensation safe harbors and exemptions, those should give many eligible, if not most eligible PPP borrowers a pathway to full or near full loan forgiveness. And it should also allow more borrowers to use the easy loan forgiveness application. The additional clarity on owner compensation, while not complete yet, because we've still got this threshold question of who is an owner employee, especially for a C or an S corporation. Nevertheless, that will help some owner employees and self-employed individuals plan their compensation, health, and retirement payment contribution schedules. And then, this is just sort of my opinion here, but I think given the timing flexibility, again, and the number of safe harbors that are now built into the PPP and the various implementing rules, it's my view, at least, that I think the focus of most loan forgiveness challenges or many loan forgiveness challenges, say, will likely be kind of threshold eligibility considerations and or need certification issues. And fraud, fraud will be a low-hanging fruit, but setting aside the clear kind of wrongdoing that we've already seen some cases brought for, when it comes to the forgiveness application process, I think the focus is likely to be quite a bit on the eligibility and need certification issues, just because there's quite a bit of flexibility now built in to be able to, utilize that what was originally meant to be an 8-week amount of funding for payroll over a 24-week period with quite a few borrower favorable exceptions and safe harbors. So with that, I'm going to look at the Q&A now and try to answer some questions. I still do want to keep this relatively short today. So stick around as long as you like, because there's going to be some information available on the screen here about our PPP compliance readiness program, which focuses on being prepared really for submitting your loan forgiveness application and being ready for an audit after you've done so, or a review by the SBA after you've done so, to make sure you have the right documents, whether that's now a state or a local order to justify kind of FTE reduction, exemption eligibility, or other aspects of the PPP. Okay, I'm going to look at the Q&A now. I'll spend some time trying to address the most broadly applicable questions. There's a question about whether what if salary reductions are due to reduced working hours? We've addressed this one previously, but the SBA and Treasury have clarified that you've really got to isolate those two tests separately. So there's one reduction relevant to working hours. That's the full-time equivalent employee test. You can have a reduction in FTEs based on fewer hours. And then separately is the wage and compensation test. So those two things are really distinct under the PPP, the way it's been implemented, because the SBA did not want to have a double penalty for potentially for borrowers that had to reduce both working hours and compensation. Is a borrower excluded from using the EZ form if their loan exceeds $2 million and requires an SBA audit? No. If the eligibility for the EZ form does not depend on loan size, then you would still have to check the box on that form if to indicate that your loan was above $2 million together with your affiliates. There were a couple questions here that I think we addressed. Like, do you have to wait the full 24 weeks before you apply for forgiveness? We covered that during the presentation. You do not, but with a couple caveats related to compensation issues. Here's a question. If a borrower elects to keep its original 8-week forgiveness period, does the safe harbor exemption remain at June 30th? The way the application form is written is generally you would calculate your full-time equivalent employee levels on the date that you submitted your application. So it might not remain June 30th, but it would actually be likely tied to the date you submit your loan forgiveness application, even if you kept your 8-week forgiveness period. There's a question, if your loan was made prior to June 5th, then the repayment is 2 years unless the company and the bank agree to extend. What guidelines are banks using to extend 5 years like loans granted after June 5th? That's really going to be a bank-by-bank decision, and they don't have to treat, I'm not aware of anything that would require them to treat all of their PPP loans uniformly in that regard. So, I think that's the kind of situation where you want to consult with your lender bank about, whether that's something they're willing to do, and if they do have a process in place for it, but there's no kind of uniform approach there. In the case of a fitness facility, if we are opening with reduced class sizes and therefore reduced staff, do you see any issue with keeping some employees on furlough and continuing to receive unemployment for a month or so and then bringing them back? Does this hinder my loan forgiveness as long as I get employees back to the level that we had prior to shutdown? In that case, you're probably, as long as you can tie back the fact that the fitness facility was shut down because of an order that, was kind of based in CDC, OSHA, or HHS guidance, you're going to get some pretty broad relief from that new exemption. So I can't speak to the specific issue of, when or how to bring employees back from furlough, but in general, this should be a situation where you get some relief based on that new broad employee and customer health and safety exemption. And I'm going to answer just a couple more questions while we have a pretty good number of people on the line here. If someone voluntarily quits, does that count as a headcount reduction? Generally, no. That was the case under the May forgiveness related guidance. Again, you're going to want to keep good documentation though of all of those, voluntary resignations or voluntary reductions. If somebody requests a reduction in hours or voluntarily resigns, you just need to keep really good record keeping of that if you're going to rely on that as an exemption. There's a question in here about what tax year will the forgiveness in debt apply to? At least for federal income tax purposes, the forgiveness of the PPP loan is not taxable. So I'm not sure if the question is, and that's under the terms of the CARES Act. And I know in general, forgiveness of debt would potentially be taxable income, but in this particular case, it's treated as not taxable, at least for federal income tax purposes. So I'm not sure if the question is meant for some other purpose, like accounting purposes, but at least for income tax purposes, it wouldn't be considered taxable income. I'll do one or two more of the questions here. It's a lot of really good questions. Do payroll costs incurred the pay period before the alternative covered period, but paid during the alternative covered period count toward forgiveness costs? The forgiveness-related rulemaking just requires that payroll costs be paid or incurred during the relevant covered period or alternative covered period. So they don't provide a specific example as they do in some of the other cases that shows, if you paid an amount that related to, say, the 2 weeks before your covered period, that you could explicitly include that. But the language is, in my mind, pretty clear, where it says it just has to be paid or incurred during your covered period. So as long as you pay it during your covered period, I think the loan forgiveness application and rulemaking allows you to include it. A lot of the other questions here are either very specific to particular situations or kind of similar to what we saw before or what questions I've already answered. Have there been any examples of the indirect impact of complying with federal, state, local orders? Our business was impacted by customers complying with those orders across multiple states, local jurisdictions. That level of documentation may not be possible. Yeah, so this is very fresh guidance, and that's something I'd given some thought to before. If you have a business that operates in multiple jurisdictions, you could have orders up from the municipal, county, state level, and so there's really not a lot of guidance out there on. This is all the guidance we have out there right now on this issue. So I just say do your best to retain the documentation that you can related to those orders, and just kind of have it ready. Fortunately, those orders are sort of on the public record, of course. So while it's best to do it contemporaneously, there would be an ability to go back and point to those orders if you did get reviewed or audited. Okay, I'll do one more question here. And thank you for all the good questions, by the way, that have been submitted. I'm sorry I won't be able to get to all of them today, but definitely if you have other questions, feel free to follow up with me or another Miller Johnson contact. We have a number of people who are working on a cross-functional basis on PPP issues. And so whether it's me or somebody else, we can help work through the questions. Here's an interesting question. How does the owner-partner calculation apply to nonprofits where there is no owner? Does this then apply to the executive director? It should not. I mean, there's been no explicit guidance confirming that this is the case for a nonprofit. But I would, I guess there could be some quirky state law out there where somebody is considered an owner employee of a nonprofit. But for the most part, I would think that whether you're an ED or another employee of a not-for-profit, that you're not going to be subject to the owner employee or owner partner limitations. But there's really been no specific guidance on that particular point. Okay. Thank you very much again for participating in the webinar. I'm sure we'll, again, as I said, have more. This is really meant to be just a high-level overview of some of the most noteworthy new developments that will probably impact people's planning in the nearer term. But we're continuing, of course, to review the guidance that's come out for the kind of next level issues, as well as updated FAQs and other rulemaking that comes out to help clarify some of these points. It's a little bit like whack-a-mole with these issues under the PPP. When you get one addressed, another one pops up. And so my contact information is up here, and we can, I guess, help you whack the moles as they pop up, whether it's me or somebody else. So thank you again for participating. I'm going to sign off now. I hope you have a great day, and stay healthy and safe. Thank you.